The stock market might tumble again. Now, while the stock market has enjoyed an impressive runoff late, the party could end when the next inflation result comes out in early August. The S&P 500 has gained 13% since hitting its lowest close of the year in mid-June, mounting a broad rally that features more than just a handful of stocks. Now, the technology-heavy Nasdaq Composite is up 16% from its mid-June low, and the RUT plus 0.65%. Russell 2000 index of stocks with smaller market capitalization has risen 14%. The main force behind that has been investors' view that the Federal Reserve will begin to slow down the sharp increases in interest rate it has been rolling out as it seeks to lower the rate of inflation by curbing economic demand. While the Fed will likely raise its target for the benchmark lending rate at its next few policy settings meeting, the probability that it lifts the rate to above 3.5% by February has gone down to 17% from a 44% chance a month ago, according to CME Group data. Now, the bank now aims to keep the benchmark, the Fed funds rate, at 2.25% to 2.5%, up from the near zero at the start of the year. Now, contributing to that more optimistic view about rates are signs in two key places that the rate of inflation has already peaked. Now, commodity prices are now way down, with West Texas Intermediate crude off about 14% since the start of June, and copper down about 16%. Not only is oil part of the consumer price in this basket, but it is possible that falling commodity prices reflect a decline in demand across the economy. Now, another indication that prices could be cooling off appeared in the S&P Global U.S. Services Purchasing Managers Index, a measure of activity in the services sector that fell to 47 in July, while anything below 50 represent a contraction in activity. If activity is diminishing, demand would fall as well, bringing prices down. Now, market will get to see whether that optimistic thesis hold water when the consumer price index is released on August 10. Economists are looking for the CPI to have gained 8.8% year over year in July, which would be below the 9.1% seen for June. For stocks to keep rising, the market needs to see that inflation is in fact cooling down. If the result is worse than expected, expectation that the Fed will slow down its rate increase could fade away, sending the stock market tumbling. The Fed has to be concerned that inflation is becoming more entrenched, and they are going to need to remain aggressive in raising interest rates, wrote Chris, Chief Investment Officer for Independent Advisor Alliance. We believe that the rally will last until later in the summer. Markets will again have another sell-off, and others agree. Now, stocks gains are now data dependent, wrote Julian Emanuel, equity strategist at Evercore. This is hardly a clear signal to aggressively buy stocks now.